Target setting is like goal setting. If you have your eyes set on an achievable but high target, then you will always have better results on average in the long run. I remember in school being an average C student. My teacher comes up to me, or my mentor comes up to me and says, you need to apply yourself and aim higher. Aim for that A plus. And even if you miss that A plus, you achieve slightly less, and then you'll still beat your average performance. So aiming for a realistic but achievable profit targets on a per trade basis is the same philosophy I use here with target setting at Puretrading. Another very critical factor is that you should always have a target in mind. By the time you place your trades and your trades are triggered, then you should already know the approximate area of where your goal is, where you're going to close your entire trade, or where you're going to leave some of the position open on the table. Target is an area on the chart that you start acting, you start looking, you start thinking. Prices are approaching this area, so you are thinking what you're going to do now. You're leaving it on the table or anything. But don't do anything as prices are very far from the target. So your goal and your target should not be changed because you've read something or you've seen something on social media or the news. This doesn't affect your trade, because by the time you've read this, the news or whatever it is, then the news has already been priced in the market. So don't be fooled by media-induced market manipulation or by social media market FOMO, fear of missing out, or the hype. The goal or the target is a specific predetermined area on your chart that you have chosen based on what you saw on your chart while you were doing the analysis. One of the first things you look for on a chart is for your entries and also your targets. We are on the United States dollar versus the CAD, and this is on the daily chart. Prices are trading at a specific level. So to create an entry point or a target, what we do is we take a rectangle shape and then we draw the nearest pivot where prices actually pivoted off from the last time. So this is current price action right here. And this here to the left is where prices has pivoted off before. And then what we have is also a high point or a resistance area. And in this example, we also have an area in the middle of the chart here, very close to price. And this is what you call a minor level. Usually in the middle of your two barriers, you have a minor level. So to qualify these levels here, what you need to do is draw all the way to the left. And there needs to be at least 3 touches here. And then it makes that a qualified level to watch in the future. So all your levels, take it all the way to the left. And just make sure that we do have some respect of that level in the past. So we have price, and the closest area to price where it is pivoted off before as a support is this one over here. And then the closest area where prices had some sort of resistance was above here. And then the next one was up there. Now remember that we are looking for big targets here. So our first barriers has a pip distance of about 134 pips. Make sure you at least have 100 pips in between your two barriers. So from the entry or the potential entry, we have our first area of importance, which is 100 pips away. And then another area on top, 250 pips. So this is absolutely perfect now. So from our daily chart, we're looking for the usual things. We're looking for the excursion beyond the mean, and we're looking for price to be inside this area of importance, the profit point. So let's drop down to the 15-minute and then have a look where prices are trading at the moment relative to where you would want prices to be for an entry. So notice that your entry would be somewhere in this area and your target is about 120 pips away. So now we know that our stop loss shouldn't be more than around about 50 pips or 60 pips, because we want our risk to be half the size of our potential profit. So let's take a further look at this example. So during the Asian session, it looks as if prices are in a tight range. So this is typical for the Asian session, and then we get our breakout usually. And usually that breakout is in the wrong direction, or you would want to trade in the opposite direction. So this is actually good for our setup that we are currently hoping for. So prices are coming down, but as we can see, the RSI is doing exactly the same thing. So unfortunately, there is no setup there. And we wait for another swipe down, perhaps. Remember, if prices are going to go all the way from this area now back up there, then it actually nullifies your potential setup. So we need prices to come down first and manipulate the bottom area again before it starts going up. Now here, there's a potential. Prices comes down very strongly, very strong bearish candle. Actually, manipulation, because it is manipulating retail traders to even sell more. So we have a low on the RSI and low on the price, and then price gets even lower. So yeah, this is our setup now on the 15-minute. As we can see, prices are making lower lows and the RSI is not. So a potential entry would be above this area. But what we need to do is to go back to the daily now, just to make sure that our targets are all okay, our targets are in place. So we are basing our entry off on the excursion beyond the mean here on the previous candle. This usually, this is not a typical example, but it's still a valid example. So what we have, prices are trading inside our profit point now, and we are basing it off on this excursion beyond the mean here. So now we have a potential target of about 120 pips, which means our setup would probably be around 60 pips or 50 pips or so. We just need to judge this by eye. Okay. Also bear in mind that we want to have our stop losses definitely below this point as well, if there's a setup here. Let's have a look again on the 15-minute, how we can play this one. So we have a guaranteed setup here now. So if prices ever gets up above this area, then we will be triggered in. So let's put a buy stop order there. I'm going to leave the stop loss and the take profit for now. So that is the area where we are triggered in. At the moment, we are not risking at all. We need this to remain equal. The same RSI divergence needs to stay diverged as prices are going through the level. So let's carry on and see what actually happens. So prices are going up. It's looking as if it's going to trigger our entry. And the RSI is still remaining up there, so it's okay. Remember, as soon as we are triggered, we're going to need, here we are triggered in now. So do not leave your trade without a stop loss. So what I'll do here is zoom out so that we can just see where the best place for our stop loss is going to be. This is the previous area here. Let's just measure from, this is our stop loss here, and this is the lows here. That's about 10 pips away from that. So we could, remember, we only have this barrier. It's between this support level and that. So we have 130 pips or so distance to play in. Also, if I scrunch this start down a bit, we can see we have our final level right on top here. So that is our entry. And if we have our stop loss here, it would be about 50 pips. So that would be 60 pip stop loss there. But we need to be concerned about this one as well. So we'll put it lower than that. We'll make our stop loss about 70 pips in this case. So it's not an exact science here. It's as long as our target, our barriers are double the amount of what our stop was initially. So let's put a stop loss in place here. There we go. And then what we have is our take profit is up here. We need to modify our take profit. Let us measure the distance between our entry and our stop loss here. It's about 70 pips. So this is how we do the calculation. It's 70 pips. Take a calculator out here. It's 70 pips times 1.25. So we want at least the 87 pip an 87 pip target in this case. So 87 pips is what we are looking for, at least from the entry all the way up, and that is above this area here. There, 87 pips. So we can adjust our take profit. And above that area or there. So what we have now is this. This is our main big area, our target that we initially wanted to go for. And then this is the area where we definitely will take some profits off the table. So let's see what happens with this trade as it plays out. See, the prices are hovering at the level now. This is the minor level. If we go back to the daily so that you can see, this is the minor level that we were talking about earlier on. And this year was our major level. This is our big goal, our A+ goal here. Go back down to the 15-minute quickly. See how prices are manipulating at the minor level at the moment. There we go.